Happy Friday, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern U.S. time on Friday, the 23rd of August, 2019. This is episode number 1581 on what looks like a day of a lot of activity, news-driven day again. We have quite an overnight range in the U.S. markets and U.S. indices. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off across the board, risk off sentiment. The laggard this morning's crude oil down 2.87%. $1.60 or so, trading at 53.76 on the October contract. The Nasdaq is down 46 points. That's the next weakest futures that I'm watching, down 0.6%. So crude, 2.85% currently versus the indices 2.6, 0.6 down to about 0.3% down. The S&P is off 13 points. The S&P dropped about it dropped from 3150 to about oh 02, 29 points on the news that China is imposing tariffs on U.S. products. That news hit the wire at exactly 7 o'clock, really well timed there. 7 o'clock Central, 8 Eastern. China to levy 5 to 10% retaliatory tariffs on 75 billion of U.S. goods effective on September 1st and December 15th. 25% tariffs on U.S. autos, 5% on U.S. auto parts from December 15th. Extra 5% on soybeans. 10% on extra 10% on wheat, corn, sorghum from December 15th. Crude oil is among the U.S. products subject to tariffs of 5%, and this is why we see the big drop in crude. Has to take countermeasures due to U.S. unilateralism and protectionism. To that, White House trade advisor Navarro responded by saying, "We still expect to have talks with China in September. Quick U.S.-UK trade deal will be good for both countries. China tariffs will not slow U.S. economy." I don't know what this guy's talking about, but of course they will. and and then there was a little more from the Fed's Mester. And in China, just now, in about 10 minutes ago, China says will allow certain U.S. car and car part products to apply for tariff exclusions to impose extra 10% on U.S. wheat. So same thing as before, and now 10% on U.S. beef and pork from September 1st. So this is relatively serious. I think they have warned and they have repeatedly said that they don't want to take countermeasures, but they will. It looks like they're kind of walking the walk as they have talked the talk for some time. So this is causing the market to revalue, reprice various assets, as we would expect, essentially removing some demand. And so or making the product more expensive, so demand is likely to be taken down. So overall, this is shaping up to be a pretty active day. I expect that there's likely to be a tweet storm or a procession of comments and feedback and so on from both sides, including newspapers in China and cabinet members and advisors on the U.S. side from the White House. So I'm expecting today to be fairly active. This is one of those days where we don't want to sit here and blow out because we held on to a trade and we're trading for hope that it would come back. This is a good day to practice taking off your bad trades immediately so you can keep yourself open to the potential for a next trade which has a chance to be good. A bad trade costs you, in terms of the loss in the trade, the loss of what could have been gained had you been going the other way. Um, And then additionally, the hit to confidence or the hit to emotional capital. So there's quite a heavy burden when we surpass our risk controls. You've heard me say this a billion times. I know it's boring. Maybe some of you are rolling your eyes right now, but it's the difference between being here tomorrow or not. So that's that. In terms of the calendar, there's a bunch of other news there, but you can look that up. In terms of the calendar, the big thing today, of course, is Fed Chair Powell at Jackson Hole at 9 Central, 10 Eastern. At the same time, we get new home sales expecting negative 0.2 and 649,000 units. And then at 3 p.m. Eastern, we get Bank of England Governor Carney, not expecting too much there. But that's it for the calendar. There's nothing that's considered high impact, but of course, Powell's comments and talk is going to be very carefully scrutinized by market participants, macro traders, and so on. And we're likely to see an effect in the market as a result of that. Let's take a look at what we expected yesterday versus what we got. Oh, for those of you who've asked, here's what it looks like. Here's what the move looks like. The market was actually making its way quite nicely towards the anticipated targets of 2940. We opened up. Here's the full session. Let it load. Let it load. Let it load. Here's yesterday's close, and then we opened up, and we have kind of made a pretty good progression towards a continuation higher, despite the selling yesterday, and we're making our way back to 2940. I've been harping on the idea that 2940, 45, and 50 are likely to be next. They're likely to see a short squeeze into the coming days. And you could see the liquidity that was resting up here at 38 and 40. And the news hit. There was a bid that's been sitting here quite some time at 25. The news hit right here at 3150. At 3150, you can see the collision that occurred at this liquidity at 27, a collision at 25, and it took out the liquidity, which is algorithmic liquidity that tracks the market. This system actually got filled for once. We see the system kind of kick in with the European Open and just track the market. Well, it's filled. This is likely to be a system that's long, probably a few hundred contracts or so. And then we get the impulse down, pullback, really nice, and then a continuation through the size below through this liquidity here at 29.05. Yesterday's low is 29.0450, something like that. We see the continuation trade. So that's the initial. This is what I call the impulsive move. This is the big move. I accept that I almost always miss those. We have about a 50% pullback right here. And then the idea is to get short on the pullback of an impulse and look for this low to be taken out. And that's what happened here with a nice collision. It took that out, consolidated in that zone, and then we've been tracking, kind of chopping upwards in a channel since then. And liquidity has come back in at 2920. At 2920, basically where that algo was earlier in the day. We have an offer here, and expect that this offer of about 300 contracts to actually trade out for potentially a scratch, or who knows what that program's doing, but that's what it looks like to me. Not that it makes a difference what any given participant's doing in there. It's just a matter of what the price and volume are telling us. So there we have it. We're sitting sideways at the low end of the range. We didn't get down to and breach 2900. We stopped at 290250 or so, and have been sitting sideways waiting for the next move. So that's where we stand. Here's what we expected yesterday. The primary scenario yesterday, given the gap up after this box here, these 3 days, which basically set up almost for some people an inverted head and shoulder. The primary idea is we're likely to see a reversion back, and in a break higher and a push towards 40, 45, and 50 above. Okay, that's the primary scenario. That's how the market was setting up. The secondary is we take out the high and we move back into the range. We tackle the point of control in this region at about 24, and then we bounce back up on the close. The third scenario, which was kind of a distant probability, was the one that actually worked out, is a test up, an impulse down, and a push right through the entire range. And that's what we saw yesterday, surprisingly. But, you know, that's what news does. Yesterday was another news day. We did open up at 32.50. We pushed above the prior day's high right there. And then we had an impulse down. We never got the continuation, and that's the caveat with trading the news, is that you're not, it's often reverting back. But yesterday's sell point up here was really pristine, in my opinion. It was very, very obvious from an auction perspective that sellers are stepping in. The delta was not participating on that in that move. I'll show you the delta and how that particular trade set itself up, like I said, quite nicely. And of course, I appreciate that it might not have worked out so well for some traders. But you know, I'm looking at, why is this not showing up? Here it goes. So we could see here that, actually, let's make these equal. You could see here that the market opens and it pushes up, but look at the delta. The delta here is not participating at all, and as soon as it starts to drop right there on this first impulse down, the delta goes negative right away, even though it's still above the open. The open is equivalent to the zero line in terms of volume. The price stayed above the open right here. It basically tested the open, went right back to the open when the delta at that point was well below the open. It just shows that on the way up, there was weakness there. There was some bid hitting by sellers, and then it tries again and it pulls back to about 50%. This is a 50% move. This is that setup that I shared on Trading Futures with Anthony Crudele, that video, the premiere of that show. This is a 50% pullback, setting us up for a test of that low down there at 31.75. And then we're looking for a follow through, and the follow through is a lot bigger than I even expected. It really was looking for 28.50 at best, and it ended up pushing all the way down to 29.04 and a quarter, and then from there it just kind of drifted up for the rest of the session. But the delta really told us the story here. We just didn't get any buy participation on the way up. Those days don't, you know, most days are not that easy to read, but yesterday was one of them, luckily. And that's that. So we ended up with a profile yesterday that was really, really kind of ugly. The profile yesterday, if I clean this up, the profile yesterday shows just a lot of price discovery through the range, a lot of small areas of acceptance, and it's just a serrated edge in terms of the profile. But overall, one of the big pieces that we need to be aware of here, let's bring back just the profile again. One of the big pieces that we need to be aware of here is look at the point of control, this maroon line. That is the most traded price. Excuse me. That is the most traded price in the session. We established it Monday. We tested it to the tick from below. Tuesday, we traded around it on Wednesday, the point of control was basically the same price. And yesterday, we dropped, we popped, and then we traded that same price again. So you could see that the market overall is really loving these prices here. And so it's really imbalanced, despite the fact that it's testing above and below. The market is completely imbalanced and has been testing both sides, and any move away from this 24 has brought us back to that area. And today's sell-off occurred from right up here, 3150 down into '02, and we are trading right here. So on a relative basis, relative to what we see here, you can see that we're still inside of that, relatively inside of that area. And I'd warned the traders this morning at Convergent Trading to be very cautious of a high potential that this is likely to drift back up. Not to 3150 maybe, but it's likely to drift back up into balance because we're still inside of these 4 days of this week of trading. We're still in equilibrium despite the big news from China this morning. Okay, so just keep price versus value in context. It's really, really important to do that. I'm going to extend the profile out to see how yesterday filled it in. You can see it filled in that point of control pretty well. And that's the profile we're working with. Look at where price is now. This is where price is now. Here's the lower high volume node. This is the neckline. This is the MCLVN, really important. So this price here, which is 15, 14 and a half, 15, is likely to present itself as the first potential resistance. And then once it's above there, once it gets above there, then a long is likely to pay out to 24 above that 1450. So that's how things are shaping up in terms of value, big picture value versus current price, which is how I trade. That's the essence of how I see the markets. The overnight session, here it is. Pretty decent rally from a continuation from yesterday. We ended up taking out the closing swing high, which was 32.75, and then we pushed all the way up to 36.75. We did not test or breach that 40 area. We're still waiting for that area. It was a pretty sweet test yesterday into that stock zone at 40, and then we created this nice distribution overnight, and then we extended it down and made it into a double distribution. The volume is 415,000 contracts, a very, very active session, and a lot of that occurred on this news. As you can see here, the volume distribution down below is quite small until this news event occurred, and there's been quite a bit of trading, although the book is starting to fill up a little bit. It was double digit in liquidity in the ES. And now it's triple digit, which is good as we head into the open. Anyway, I'm way over my time here. Let's take a look at what's expected for today. Now, things changed dramatically from when I did my homework last night. As you can imagine, with this news from China, we need to just narrow things down a little bit. Let me see where my sigmas are. So one volatility sigma is okay all the way down to 28.77 and a quarter in terms of the close. So let's scrunch this down just a tad, move it lower. And the primary scenario for this morning, given where we are, which changes completely from what we saw, what I had last night, the primary scenario is it's likely to make another attempt at this low, test below the overnight low of 2.5 down into 01 or even 2900. I'm looking for an impulse up, and I'm looking for a market that is responsive. Looking for a responsive play back towards 24 and then consolidation into 24 into the weekend. I'm looking for it to sell off a little bit into the close, actually. There's a significant amount of risk coming into risk assets into the weekend. That's the primary scenario. I'm looking for it to be responsive. Again, the biggest reason for it to be responsive is that we're still inside of this magnetic area, this balance area, and we have not moved into the next balance area, which is separated. We're separated from that area with a gap. Now, if the market slips down and gets below the composite low, now we're talking pretty serious stuff. So that's the secondary scenario. We open up, we attempt to be responsive, we get an impulse down, push through the overnight low, and then push through this low that we put in at 28.9750, and we fill the gap. If we fill the gap, this composite, this micro composite, gives us a low volume node here. If we fill the gap, we start to move into the next key areas below, and then we're looking for it to bounce and then continue down. And in that case, the longer term target becomes 28.40 below. I'm not saying we'll get that today, because that would be quite a range, but it's possible. But we are basically breaking away from this balance zone and moving into the next balance zone down once we clear this 28.95 area. So if it gets below 28.95, it might bounce up or do whatever, but overall the sentiment is likely to be for the sellers. And given that we're going into the holiday, into the weekend, it is Friday, given the additional risk, the fact that both of these, the greatest, the two greatest trading partners in the world are lobbing stuff at each other, it's likely to be very risky to hold things into the weekends. We may see a market that is just splashing down lower. And so that's where scenario 2 comes from. In either case, you'll notice that both scenarios show a fair amount of range and volatility, but still, we don't forget value versus price. And value shows that balance is at 24. We have not exited that balance zone, that micro composite zone, even with the low that was put in after the news, after a 30-point drop today. We're still inside of that balance zone, and that's why I'm expecting it to drift back to 24. So I'm looking for, there's a strong potential that one side or the other is going to say something to temper the market a little bit. It's in neither government's best interest to destroy valuation for its citizens. Okay, so this is likely to play out that way. Anyway, that's what I have for you. Again, the liquidity, there's quite a bit of it now as the market begins to open. I'm looking for a drift back up to yesterday's close in 24.50. There's a fair amount of liquidity at 2900s. We would expect at the century figure, and then 29.98, and then we're clear down to that big 28.95 area, and then there's this long-term liquidity that's getting thicker at 29.80, which will be the first target on scenario 2. Okay. I want to remind you again, I didn't do this earlier because there's a lot going on. I want to remind you that it's like Friday. Today's like Friday. Please take a moment to hit the thumbs up button. I know I took a lot of time, 25 minutes for this 15-minute trader bite, but there's a lot to cover today. Please take a moment to hit the like button if you're on YouTube. I'd appreciate it. Good luck today, and mind your risk first. We want to see you here Monday. Of course, if you're in the UK, you're not here on Monday, but we'd like to see you here on the next trading day as opposed to having to close your account because you just blew up today. Don't blow up today. That would be very disappointing for everybody. Take care.